Hi everyone, welcome back to BeRich. It's Saturday. Today, as promised yesterday, I did want to talk about an American company today, and tomorrow I'll talk about a Japanese company. Give you some food for thought as we get into the week and keep plugging away. Like I said, there's lots of noise. Early morning today was that Trump has rolled back some of the tariffs, especially when it comes to basic food requirement in the United States because of inflation pressures. There has been immense pressure on him to roll back some of the tariffs because now inflation is starting to finally bite. And the goods he's rolling the inflation back on is coffee, bananas, and beef, of course, because he's trying to slash consumer prices. We're getting into Thanksgiving, we're getting into holidays. Already things are very tight in terms of, I was talking with Anand, incomes are not going up, inflation is up, and families are hurting. So he needs to do something because his ratings are off the cliff. And this, on top of the Epstein saga, which is unfolding, and he's doing a lot of firefighting right now. And there seems to be a lot of dissent in his MAGA base itself. He seemed to have taken a softer stance towards immigration by saying, Americans don't have high-skilled people to do the work right now. Maybe we can train them in the future, but right now we need to allow migrants to come in to do these high-skilled jobs. And so that sounded like he was pivoting away from his hard stance on H-1B. And that led to one of the Republican lawmakers immediately filing a bill, proposing a bill that is saying they should freeze all H-1Bs and even cancel the H-1B program altogether. And another side, of course, the Epstein file, that is also leading to a lot of heartache for him. So he's going to have a tough Thanksgiving. I can imagine his family gathering, how it's going to be with the MAGA base. But that said, all this is noise. The reason why I'm saying all this is noise is these are cyclical. Presidents come, things happen, things go. 10 years from now, this will be in the rearview mirror. Like 10 years ago, Obama was there, he was doing a lot of things. All that is in the rearview mirror. History just keeps happening. Presidents come and go. We can't really worry about that when we look at our investment horizon, because our investment horizons are so long, these become noise and not fundamentally signal. So that said, there is an industry which is very important to humanity as a whole, and which AI is not going to disrupt as much because fundamentally it's got to do with biology. I'm talking about the healthcare, and I'm talking about Becton Dickinson and Co. We'll just say BD for short because I don't want to say Becton Dickinson and Co. every single time, so I just want to say BD. So BD is a leading global medical tech manufacturer, supply manufacturer, has a history dating back to 1897, and it provides essential tools and consumables that enable our modern medicine. They provide syringes, needles, catheters, IV delivery systems. So all the consumables which we use in hospitals and labs and in anything which is medical related, they are providing. They are virtually in every hospital around the world. And most of the products are high frequency, single use, like syringes. And they have three segments the company deals in. One is BD Medical, BD Life Sciences, and BD Interventional. From medical delivery to clinical diagnostics, they have products and they're there everywhere. They're quintessentially, I would say, a defensive growth company. And what does that mean? I'm going to get into. And their CEO is a person called Thomas Pollan. So this is a brief overview of the company. And why am I looking at this company? Of course, because of the moat it has. It has a huge brand, which is BD, which has been there for over 100 years. And they provide a product which is recurring and is needed all the time, and it's disposable. So there's a high frequency and it's not going to go away. There's no AI disruption here. There is no, disruption of the sort which we are seeing in other industries and which we've been talking about. So this is a great company to dive into. So that doesn't mean immediately you see this video and you go buy BD. Hear me out. Because they posted a revenue of $5.5 billion, which is up 10% year on year. The EPS is around $5-6, and that's potentially of a 9% growth this year. So like I said, they do have a moat. Recurring revenue, right? The moat is sticky. Because of recurring revenue, high need for this product in all the segments I mentioned, from hospitals to diagnostic labs. Everybody needs it around the world. So the revenue and the orders are recurring and it'll be coming. Once these orders are booked, they come through. Because once you rely on a brand, a hospital usually doesn't change brands, or a clinic doesn't change brands. Even consumers don't change brands. Once they fall into a certain brand, they pretty much go on cruise control. We all know this. We all use brands like this. There has to be a high, reason to switch a brand. Something new, something innovative has to be in it for us to switch a brand. And there's very little of that in this product category where they're dealing with. Second thing is there's a high regulatory clearance for this. Trust barriers are there because you just cannot make a needle and start supplying it to the world. Every country has a certain regulatory barrier when these needles are made or IV bags are made. Then go through very stringent processes and get certification, which these guys have done, and they've done it for 100 years. So their brand is trusted. So that is another barrier which they hold. And globally, they're like the number one brand in market position when you're talking about. They've done a lot of merger and acquisitions. In 2015, they bought CareFusion. In 2017, CR Bard, right? Both these acquisitions added on substantial debt onto their balance sheet. And in 2022, they spun off an insulin-making syringe company called Embecta, was spun off. So all that said, they do have a lot of debt on their balance sheet. And that's why I said, hold on, don't go running and say, okay, pick shovel company of healthcare and we must definitely look at it. Yeah, look at it. But there is a debt of almost $20 billion on their balance sheet. And the debt to equity is standing at 76, which is high, right? EBITDA last 12 months has been at $6.14 billion. And the annual interest payment is standing around at $23 million. So this is a way to look at it. Yes, there's a lot of debt, but they're able to manage their debt. They've been bringing their debt down, but it's still there. So PE stands at around at 33. And if you look at discounted cash flow and relative value for this company, it's around 30% undervalued. The stock should be around at $281 and it's trading at $193. So I've said both sides, and now you're wondering, okay, Vinod, you're saying yes, you're saying no. So why are you saying it like this? Because the question is this company a value trap? What is a value trap? The stock is cheap because the fundamentals are good, right? But there are fundamental challenges also for this company. Can the company accelerate the growth, right, to catch up its earnings to justify all the debt it has? Or is it going to be dragging its feet, for some time? Because the ROIC on this company has been 4 to 5%, and that is relatively low. So do remember, there's cost cutting happening in medical industry too. Hospitals are cutting costs. At the same time, this is something which is fundamentally required. It's essential. So there are counterpoints to this. So I want you to think about BD, Becton Dickinson Co, to think about it and see if this is the pick and shovel company for healthcare industry that you should be investing in. A lot of people do feel it's very undervalued. It's been undervalued for quite some time. So is it going to be there? Is it a low-hanging fruit which is be consolidating now and then sipping? Is something I'm curious to know. Have you already bought this company? Is it there in your portfolio? So, or is this completely new to you? So I want to know. Comments down below, and I want to read them and definitely give my feedback and thoughts on it once I read those comments. Anyway, thanks for being with me on BeRich today. Tomorrow I'll come back with another Japanese company which I wanted to talk about. That will round up the week, and then we get on to Monday, where it'll be a fresh week. And as the markets open in Japan, we'll see what is going to happen with the rollback Trump has given us, and see how the markets react to all this. Thanks for being with me on BeRich today. See you guys tomorrow.